What's up, guys? It's Flopping Groper, and in this video, I'm just gonna go over setting up the avwap tool specifically for Bitcoin. Like, what are the VWAPs that I'm gonna be watching this year in regards to Bitcoin? How do you set them up? How are we gonna use them? All that stuff. It should be like a quick 5-minute video, because honestly, I'm sick of explaining it every video. So I want everyone to be on the same page. So a VWAP is a volume weighted average price. I'm not talking about the yellow oscillator on Market Cipher. I'm going to be referring to this as the yellow oscillator from now on because it's not a proper VWAP. The real VWAP is what's on Market Cipher SR. It's the white intraday strategy line. And it resets each day, and it provides a volume weighted average price that serves as a fair value line. And so it's great for DCAs, it's great for scalping. It's a really great way to see when a price is relatively cheap or relatively expensive on an intraday basis. When the price action is over it, longs are favored, the green dots are supercharged. When the price is below this line, it's the opposite. The red dots are supercharged and shorts are favored. It's definitely a great tool to use in trending markets. In sideways markets, it gets a little tricky. You definitely want to be using the intraday strategy in a market that is trending, because the mean reversion, like betting on divergences back to the VWAP line, it gets tricky. You know, it's because there's two ways to look at the intraday strategy. Do you bet on the price going back to it, or do you bet on price running from it? I like to use this tool in markets where it's running from the VWAP, and you can favor one side or the other. But I digress on that. So I will be whipping out the intraday strategy from time to time, especially for like specific entries. But Brian Shannon is a really good trader who invented the anchored VWAP tool. So he used the traditional VWAP, and he loved it so much that he created a tool called the anchored VWAP. And so it's still a VWAP, but it's a tool that he got added on TradingView, and you can place it at any candle you want, and it places a volume weighted average price based on any candle. So to explain this a little bit, what is a VWAP? It's not like a simple moving average or an EMA. It's not a rolling set of data where, like, let's say you have like a 20 candle moving average, and then the 21st candle comes, and then so candle one, that data falls off the block. That's not how this works. If you put an anchor on a candle, this initial data point gets more important with time. It's a cumulative data set. And so it's weighing volume and price. So if there's ever a spike in volume, but the price doesn't move, the VWAP line will move because it has that volume component. So, and the way I like to describe it is like, price is like water and volume is like fire. And so when you mix these two components into a single indicator, the VWAP lines act as like steam. It's like the mixture of fire and water. It's like a steam powered engine that allows the market to move from these anchors. But there's a little bit of skill and a little bit of things you got to know when placing these things. And there's some specific anchors that we're going to be watching as a community, because I believe that they are the most relevant anchors to be watching. So the first major anchor that you guys are going to place is you're going to go to the daily chart, and you're going to go to the first of the month, and you're going to place an anchor right there. And we're going to make this purple. And that's going to be our year-to-date anchor. And so this is relevant because from a year-to-date standpoint, we want to see how Bitcoin's doing. You can see that at the start of the year, we did rally up and we did pick a side. We did say that we do want to ride on top of the year-to-date VWAP. But after that ETF decision, there was some sell the news, right? And so we came down, but we came back up, and there was a period of time where things were a little sketchy, and the year-to-date served as resistance. But once we broke above that, and once the year-to-date started ascending, the market went crazy. And so if the year to date is in ascension, that's really good for us from a bullish standpoint. If the year to date goes sideways, that's a little more of an indication of consolidation. And if the year to date is ever descending, such as back here, there was a period of time this year where the year to date was in descent, and you can see what the price was doing. And so this line is very relevant. Now, the second anchor is going to go at the January low. And this one we're going to do brown, because that's just what the people on the stream wanted me to do. They wanted me to make this brown earlier today. So we're going to make this the brown anchor here. And you just go to like orange and you like lower the opacity. And this represents the start of the uptrend. Like there was this big uptrend that we had, and we want to monitor that sentiment. So there hasn't been many trading opportunities off this line, but I believe that in the future, this line is going to become very important to us. We are eventually going to have to come into contact with it. And I got a feeling like there's going to be an explosive move off this, and it's worth watching. Now, the second line is going to go, or sorry, the third important anchor is going to go right here at the bottom of this line here on the 23rd of February. And I like this one. We're going to make it pink. I like this one because this line absorbed that massive 10% correction, and we just got some really good, if you go into the smaller time frames, we got some really good play off the pink line recently here. So I got a feeling like this will hold. We got punched in the face 1, 2 times. If the market gets punched in the face a third time, I got a feeling like the pink line may fall, but it is still moderately in ascension. It's still looking strong, and it's shown strength in the past to be able to absorb large corrections. So I got a feeling like this can hold. But if it does ever break down, we would have to look for support down at the poop line, the brown line down here. Now the fourth and final macro VWAP that I want to look at is going to be this 10% correction that we had. So we're going to make this orange right there. And this has been a very great line for longs in the last couple weeks. So you can see we had 1, 2, 3, 4, 5, 6 major long plays. And while this sentiment is going sideways, this almost represents the hype from, the last. This is like the Twitter hype line, It's gone a little bit sideways, and now we're starting to violate it. So if there is bearish activities, coming toward us, this is the first line of defense. It's the Twitter hype. So if this does fall, then we are relying on more longer term bullish sentiment to hold this market up. So I really like this line for now. We're going to continue to watch it. It could become resistance in the future. And then on top of these 4 macro VWAPs that I want you guys looking at, you always want to, if there's a recent high, we want to put a VWAP at that recent high, a bearish VWAP, and we want to monitor that bearish sentiment, because it's not very wise to bet on market continuation until we can recover over this recent bearish sentiment. So anytime there's a new high in the market, and there's going to be lots of them, because in a market like this, it's going to be new all-time highs regularly. And so monitoring bearish anchors that form and waiting for price to overcome them before we bet on major continuation, that's going to save us a lot of trouble in this market. So that's basically it. That's how you set up the 4 major anchors, and I want you guys looking at whatever the bearish anchor is that's the most relevant. And remember, as your settings, I've gone over this a couple times, you want to go into your anchor settings, and you want to select OHLC4. What this means is it takes the open, the high, the low, and the close and divides it by 4. This makes the anchor form at the exact middle of whatever candle you place, so it's as least as biased as possible, and it's going to give you a good average there. So we're going to use these 4 macro anchors that are bullish currently. We're going to look at whatever bearish anchors form, and we're also going to be using the intraday strategy. And so I'm going to be pairing all of these VWAPs with Market Cipher to do all my analysis. And hopefully this video helps you like understand like why I picked these points to monitor, why I'm bullish, because these things are in ascent. Although I do see some sideways. You see how as the volume shifts, these lines are going to shift, and the market will shift along with that. Volume's a really important metric to look at. It's completely different than price. Volume is how many shares are being traded, which has a lot to do with dictating like how hard a price can move. So the fact that we have some dynamic supports that are volume weighted, you know, me and CF, we love volume weighted indicators. We always weigh the money flow very highly. Volume based indications are typically leading and very effective. And so I'll be looking for big moves, big wave interactions at these lines. It's going to be the basis of my strategy, and it's going to allow us to not see ourselves as scalp traders or swing traders. The anchored VWAPs teach you to just trade how the market dictates. Sometimes trades will take a while, sometimes they won't. So hopefully this video is helpful to you guys to get caught up to speed, so you don't have to keep asking me every stream how to set up these anchors. So thank you guys. Yeah.